Can you, Pomp? You good? Can you hear me?
Yeah, I got you guys. What's going on?
Perfect. It's going well. There's a dollar hit an all-time low in Bitcoin terms today, so it's a good day.
That is true. That is true. Dollar maximalist in shambles. All right,
Exactly. Well,
let's get this party started.
yeah, we
Let's
can
do
jump
it.
right into it. This Sean's on here too. He's with Simple Mining, our account executive. He'll maybe be jumping in and out of the conversation, but
Yeah, what's up,
yeah,
Pop?
we scheduled. You got anything, Sean?
No. Sorry, go ahead. I was just introducing myself.
Yeah. No, we had our CEO Adam went on your YouTube channel not that long ago, and you guys were talking about, I think the topic was mining. Is the United States going to start mining Bitcoin? And for anybody who's not aware, towards the beginning of this year, we partnered with Pomp and YouTube channel, newsletter, all of the content engines that you have going on, and started running a miner for you, and it's been going extremely well. We've obviously had a lot of business come through you, and your brand is continuing to thrive and be successful. And so we're coming back around this time. Instead of the YouTube podcast, we're going to run a space, and the idea here is to have an insightful discussion on, I think, policy, which is extremely relevant at this current time, and the overall macroeconomic environment, and how that's going to impact assets, specifically Bitcoin miners, and what our clients are investing in. And I think you, Pomp, you obviously have a wealth of information on this. You're talking with some of the highest IQ investors every single day, so I think you're going to have some good thoughts on this.
Yeah, look, I think that what we're watching is exactly what happens when people have undisciplined monetary and fiscal policy. You end up driving national debt through the roof, and you don't really have a choice. You got to debase the dollar. If you debase the dollar, then here we go. And you're going to see asset prices continue to go higher and higher. I love it. Lynn Alden's, there's no stopping this train. And I think that Bitcoin is a asset that is just an index on, are they going to print money? And I keep saying that, Bitcoin's not going to stop going up until they stop printing money. And I don't think they're going to stop printing money. So see what happens. But also,
Yeah.
you see it in stocks, you see it in gold, you see it in real estate. You know what I mean? This is like a global phenomenon. Bitcoin just happens to be, to borrow Paul Tudor Jones's comments, the fastest horse.
Yeah, I mean, it's like the saying that a lot of times, like you'll hear sailors say stuff like Bitcoin's going up forever, and like when you're talking to people who don't understand Bitcoin, it's like the saying of, what is it? Bitcoin has no top because fiat has no bottom. Whereas I
Mm-hmm.
think people, they don't understand the fact that, like, the 2% inflation target, the dollar is getting debased forever. So anything that you're valuing in dollars, which is getting debased forever, is going up forever.
It's crazy. It's
But
absolutely crazy. And it's not going to
yeah,
stop.
yeah. And I think as far as Bitcoin mining specifically, hash price, which is the revenue that a Bitcoin miner can expect to receive for 1 unit of hash, is at roughly $60, which is close to it may or may not be the all-time high from this year, but it's close to the highs that it was seeing in 2024, but it's still below the baseline prior to the halving. So I think if we do see, I mean, I think I saw a chart earlier this morning of somebody drawing a line where it's saying we're going straight to $170,000 per Bitcoin, which, if we do get an aggressive price swing, I think to that level of an upside, we could see the mining industry and Bitcoin miners specifically, not only like the value of the ASIC, but also hash price, like how much Bitcoin is it earning per day, start to look like it did in 2020. Like when you bought an ASIC, an S19 in 2020, and we just saw the massive breakaway between hash rate and the difficulty for miners and the price, a huge split there, and profitability just went through the roof. It was like over 10x in the value of an S19, which now it's much lower. But all that to say, the markets are obviously starting to heat up, and you're talking about this a lot, Pump. I think personally a big factor for this has been the Trump administration. I mean, I'd be interesting to hear your thoughts. Like, do you think and this isn't a political conversation, but do you think that we would be where we are today if the election would have gone in the other direction? Like, would Bitcoin have been as successful?
Maybe Bitcoin would be higher. Who knows, right? If money printing is all that matters, the Biden administration was pretty good at printing money. So there's a world where it actually could be higher because they would have
I
printed
mean,
more
do you
money.
think they would have had a bill though that pushes the
No.
ceiling up 5 trillion?
Oh, who knows what they would have done? They were, just throwing money in every corner of the financial system. No, look, I think that there are two things. It really comes down to, do you believe that the bullish stance on Bitcoin and crypto is more important than the printing of money? In the short term, the bullish stance of the Trump administration was way more important than how much money was printed from November to, today. In the long run, all that matters is how much money is printed, regardless of any political stance or on policy for Bitcoin. So I think that it's an interesting question as to, like, hey, would it have been higher under a different administration? I don't think the answer is yes. I think the answer is having a pro Bitcoin president has been, a tailwind, right? It's basically opened the market to anyone who wanted to participate.
Yeah, I mean, I do think the printer plays a big role in obviously like the fiscal irresponsibility and how much the dollar is getting debased plays a role in the success of Bitcoin. But I think it's also just like an adoption curve, like how many more people are using dollars, like or using Bitcoin. Like if Trump was to say that like Bitcoin is now a legal tender in the United States, that would be huge. Where obviously like the Biden administration was very like what happened with Samurai Wallet, and I mean, there's a lot of things to dive into there, and that's not what this conversation is about. But they were certainly more on the side of like a CBDC and not of like enabling people to use a decentralized money that is Bitcoin.
Yeah, and look, I think that there's kind of like I always say that Bitcoin is attractive to different people for different reasons. There's like the, self custody crowd. There's the speculator crowd, which is kind of like undisciplined investing. There's the long term holder, kind of investment crowd that comes more from like Wall Street. And then there's the people who are trying to use Bitcoin. There's the people who are trying to build on Bitcoin. There's the miners, the node operators. You know what I mean? There's all these different people. I think that there is. Just a really, really interesting dynamic where you have an asset that went from 0 to 2 trillion in 15 years. No CEO, no board, no marketing budget, no anything. It's one of the most recognizable brands anywhere in the world, regardless of language, etc. And you basically have an asset that is tackling what I would argue is the single most important problem in the world, which is the debasement of fiat currency. And if you are able to hand someone a piece of technology that can prevent them from having their hard-earned economic value debased away, um, man, you can positively impact their life in an incredible way that just no other technology can do.
Yeah, I mean, it's like inflation is a problem for every single human on the planet, and Bitcoin is a solution for every single human on the planet. Uh, but yeah, I think as far as like the big beautiful bill, I mean passing on or getting signed on July 4th, it's it's a big catalyst, at least from my opinion. And it seems like from like a macro perspective, it's like a classic supply side stimulus package with what protectionist fiscal conservative elements, but there may be like who knows what's going to happen with inflation. I mean, you have people that are concerned with the inequality side of things, and obviously what we're talking about, the deficit growth. And you have people, investors like Ray Dalio, saying like he's constantly talking about the U.S. is in this late stage debt cycle, and the tariffs and these tax cuts, they might not necessarily reshore manufacturing, which it seems like that was a big part of the conversation initially. Why they were doing this was for due to the higher domestic costs and the potentially getting the global supply chain back in our favor. I'd be curious, when did you first have like this bill came into play? When did you first hear about it? When were you thinking about it? And when were you immediately like, this is extremely bullish for asset prices?
In terms of the money printing or for Bitcoin?
I think in terms of, I mean, yeah, I mean, obviously Bitcoin and money printing is going to be bullish for Bitcoin, but this bill comes out and you hear about it and you're like, okay, because you tweeted today, you were like, oh, back in April, I wasn't worried about tariffs at all or any of this. Like, assets are gonna hit all time high prices by the end of the year. Like, what was your basis for having that perspective?
Because they've outlawed bear markets. We're not allowed to have bear markets in public equities anymore. They will let prices go down for a short period of time, but think about every single time that we have gotten close to there being any sort of prolonged bear market. And I think, it's hard to measure exactly, but I think that they won't let prices go down for 12 months or more. So it could go down for 2 months,
Who's they?
whatever.
Who's they?
The government. I think that between monetary and fiscal policy, so the Fed, the politicians, as soon as prices started to fall, you saw the Treasury Secretary come out and say, "Hey, we've got the ability to backstop the market." You saw the president start coming out. You saw even the Fed chairman come out, right? Like they want to convey confidence to the market, and it used to be that they could do it with words. Now they got to do it with action. And to me, that is maybe that one of the biggest things that. The market now expects them to step in. And so, if that's the expectation, in a weird way, the market now drives monetary policy because you have to do what the market wants. The market throws a fit. And I think that's where you saw like the really high tariff rates. The bond market threw a fit, and they kind of backpedaled a little bit, right? Same
That
thing
was
as
You think that was their initial plan because that was it seemed like they wanted to get investors into US Treasuries to lower the yield curve to refinance the debt. That was like the consensus for a lot of people. That's what they were saying. And then it backfired and they saw it go up. So you're saying that's like sort and now they you hear Besant saying like, "Oh, well, we're just going to run it hot and outgrow it." You think that's like basically what went down?
they got no other choice. They obviously we're not going to cut rates, right? If we're not going to, or I'm sorry, we're not going to cut spending. So if we're not going to cut spending, then they're going to go all in on printing. That's pretty much it. It's only two choices they got.
What do you think is I mean, obviously, this is way out there, not necessarily easy to pinpoint. But like, at what point is this like this whole U.S. Treasury thing no longer viable, and investors are getting to the point like the risk free asset used to be the bonds or the 60-40 portfolio, and maybe we'll jump into this 60% stocks, 40% bonds. Nobody in their right mind right now should be sitting in U.S. Treasuries unless you have certain obligations for the firm that you're at. So how do you think that's going to change for if investors no longer want to be holding US Treasuries, then how does this shift like portfolio allocation theory, and what does this mean for the United States continuing to borrow these mass amounts of money?
Well, I think that there's a lot of things to unpack here, right? So the first is who owns treasuries? Well, people who aren't paying attention. That's probably actually a small part. People who have some sort of mandate where they have to do it. People who are addicted to yield. All those things, right? So they're doing it for not capital appreciation purposes. They're doing it for yield purposes. Um, and then it's also for people who are using it just as a cash equivalent, right? Is well, I'm going to hold cash, so I might as well just hold this and earn a little bit of yield. And then I think that there are a ton of people that are going away from treasuries. Look at China and Japan. They used to be like 22% of all U.S. Treasury purchases. Now they're like 7. Stable coins have stepped in and obviously been a big boom, but not enough. And so I think that you got kind of this weird world there of what do you do, right? If you want to continue to drive demand. And I think that a lot of the old levers are gone. And so now what you have to do is you have a choice. You can either go and you can find net new demand. So lean into stable coins, lean into things like that. Or you basically hold on till your last breath before you drown and figure out, what's the escape hatch. I don't think that they're going to play the escape hatch game. I think that they are going to try to keep the system going as much as it can. I think it's more resilient than people give it credit for. And so my expectation is that, the day I die, U.S. dollars will still be around. The The other thing is we will likely also get some sort of continuation of dollar dominance, both on a adoption standpoint, which we've seen over the last 5 years. But my guess is that right now we've seen the dollar relative strength plummet, down 10% to start the year. We're starting, I think, like 50 years. I actually think that means right now the dollar may strengthen on a relative basis and kind of U-turn here and kind of catch a lot of people off sides. So you just got to remember this is like a very complex global economic machine. It's not as easy as like, A is true, so B must happen. But I do think that kind of the simplest thing in finance right now is that Bitcoin is going much, much higher over the long run, simply because it is the asset that is most sensitive to global liquidity. And we now know that no matter what occurs in the market, you are going to see not only the United States, but every single country is going to print money and debase their currency.
Yeah, I think with this could maybe get into like the whole tariff situation. And I know that you've said multiple times that you think that tariffs are not going to raise prices and that actually like looking at the true inflation index, like they've gotten cheaper with the 10% blanket tariffs that have already come into effect, which do you think that that's going to change come what August 1st is the deadline specific? I mean, obviously that's going to change like 60% on goods from China. And like for Bitcoin miners specifically, new shipments of, because I mean, practically every single ASIC mining machine is coming from over there. New shipments are going to be facing 20 to 60% of added cost, which 10 to 40% of that could be passed on to the retail price. Do you think that once this August 1st deadline happens, like you authentically think that prices are like how are prices going to go down?
In terms of prices,
Yeah,
like
like
of the
I mean,
goods.
obviously, I'm talking about Bitcoin miners specifically. Like, it seems very obvious that if unless there's some negotiation that happens, like the price of ASICs are going to go up due to the tariffs.
Maybe. I think that it depends on can the United States produce them. So what we've seen in most products that were in
Yeah, I don't. That's insanely unlikely that the United States starts like doing what Bitmain is doing, just based off of how closed sourced it is.
well, of course, right? But the point being that let's just use the real examples that we have. In 2018, we put tariffs on solar panels, on steel, and on washer machines. All three of those products saw in the first 90 days a slight price increase, and then within 12 months, they were all at lower prices than they had been pre-tariff. Now, why does that happen? Well, if you look at each one of them, U.S. steel production, we had the capacity to make the steel in America, but all of the foreign steel producers were being subsidized by their local governments. They're able to flood the market with cheap steel, and therefore there was unfair trade practices. We put the tariff on to level the playing field. Now American producers went from about 50% production to over 80%, which means we actually had more supply in America from American producers, and the price of steel available to Americans went down. If you look at washer machines, similar thing. In that case, actually, what we saw was not that all of a sudden America figured out how to become really good at making washer machines. Two different South Korean washer machine manufacturers actually came to the US. They took over existing infrastructure that had been built and abandoned, and they moved their manufacturing facilities, or some of their manufacturing facilities, to America, and they started to produce washer machines. Washer machine prices went down. And then if
But
you look,
that type of stuff takes time, does it not? Like,
it
are we
took less
not
than
going to
one.
see a
It took
temper?
it took less than 1 year to get the prices lower than they were pre-tariff. So that's the whole thing. Is like, yeah, if you had to start from scratch on a piece of land that's got no nothing on it, and you gotta get the sewage out there, you gotta get the roads, the infrastructure, you gotta build the pad, you gotta build the building. Yeah, of course that takes time. But what ends up happening is people run around and they realize, like, wait a second, there's a bunch of just abandoned places that no one's using, and so we can set up shop, right? So just go back for a second. Steel, we had the production capacity, we weren't using it. Now we had the financial incentive, we started to use it. With washer machines, we moved manufacturers here. Solar panels is really interesting. We actually did not change anything on the solar panel side. American production was already growing. It continued to grow, but demand was so high and the technology was improving so quickly that actually, even with the tariffs, we saw the price of solar panels go down, and it continues to plummet still all the way through today. But demand like 5 or 10x, I forget the exact number, during that period. And so there are times where actually nothing in the market needs to change because what you can do is you can actually overwhelm the tariffs with demand and with technology innovation. Now, what's interesting is that Trump's 2018 tariffs on the solar panels, Biden actually increased it from 25 to 50%. It did not slow down demand. Right. So it's just like that. I mean, it's a very, very rare case. I'm not saying that's going to happen with anything Bitcoin related, but there are times where you can do that. So the reason why I use those three examples are when there are tariffs, you can get people who move their manufacturing, you can get American capacity better used, or you can basically have market forces that overwhelm the tariff. With Bitcoin mining, I actually don't think that any of those three things are likely to happen. What I bet is part of what will lessen the blow is similar to what happened with the increased tariff on China. So we put a 25% tariff on China. I believe it was in 2018, maybe 2017. I can't remember. But when we put that tariff on China, what we saw was only a 4% increase to the consumer for Chinese goods. Now, how did we put a 25% tariff, but there was only a 4% increase? What happens is there are multiple people in the supply chain that each eat a little bit of it. So you have the Chinese manufacturer, or maybe the Chinese raw material provider. They eat a little bit of it. Their margin goes down a couple, maybe 1-2%. Then you've got the manufacturer. Then you've got the person who's actually bringing it by sea or air. Then you've got the distributor. Then you've got the person who receives it domestically. Then you've got, let's say, a distributor in America. Then you've got the actual wholesaler. Then you've got the final retailer, et cetera. And so you go through all this, and what ends up happening is each person in these supply chains ends up eating some of it. Not saying it's good, not saying it's bad. I'm just saying what happens. And so with Bitcoin mining, what's interesting is there's actually not as many kind of stops along the chain, right? Because there's a lot of vertical integration. And so I would bet that if there is continued tariffs, if they actually do go in place and they stay in place, you will see the price of the hardware increase, but it won't be as much as the tariff. So if there's a 25% tariff, the prices won't go up 25%. There'll be some difference. But also, that holds constant the fact that there would be no new technology that comes out. But no different than if you've seen, let's say, car or TVs, right? When we were all kids, TVs were super expensive. Now they're like $100. You can get a pretty good TV. Same thing here is if there's a new iteration of mining equipment, that also can kind of change the calculation. So, mining equipment in particular, I think is a little bit unique. It's a pretty niche industry, physical piece of hardware. But I think that the story is not as bad as like the fear mongers want you to believe, but also it would be unreasonable to think that there's going to be zero change to the price if American manufacturing doesn't have the capacity, and also we don't think Bitmain's going to go, set up a new factory in America or anything.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
Like that.
Yeah. So I mean, it sounds like it really just depends on the pass-through rates and like how many stops in the chain are going to eat a little bit of that increase to ultimately like the people that are buying these in the United States, what the price differential is going to be for them. How would you? I mean, it sounds like you are painting it semi black and white, as in like no, tariffs are going to be lower prices and it's not going to be what the majority of people are thinking. Why do you think that, like, how do you think the Federal Reserve is thinking about this? Where, I mean, in the last meeting, it was basically like uncertainty. We don't know what's going to happen with the tariffs. So we're going to continue to like stay on pause. The next meeting is what, the 29th, the end of this month. What do you think is going to be their tone? Is it going to be a similar situation? I mean, how, especially with, I mean, I'm not sure the exact numbers on how jobs have changed, but they have to see that inflation is not as high as maybe they thought it was. But it would seem at this point that the two targets of inflation and employment, if those look good, then they should have a green light to cut.
I think that they should have already cut. Don't you?
I mean, that maybe that would be why Trump keeps calling Jerome Powell like a brainlet idiot and says he has no idea what he's doing.
I think that is probably true. Like, I guess the question just becomes like, is Jerome Powell still going to be here in May? No. Okay. So then the question becomes, who's going to be running the Federal Reserve between now and May? Right now, Jerome Powell. But if they implement kind of a shadow Fed, that's going to get real crazy, right?
What do you mean? What do you mean by that? A shadow Fed?
They basically can say, "Hey, we're going to announce Jerome Powell's replacement." They don't run the Fed, but all of a sudden you got kind of a lame duck in the chairman because everyone's just going to keep looking at the incoming Fed and say, "Well, what do you think?"
Do you have any ideas as far as who you think it may be? I did see that Trump may have offered it to Besant, which I think he responded to that with, "I like the job that I currently have." But I mean, that would seem like I mean, not necessarily a conflict of interest, but people like to act like the U.S. Treasury and the Federal Reserve are completely separate entities, and that there's obviously no commingling going on, which maybe like from a specific balance sheet perspective, but there's certainly meetings going on that people don't know about, and I think there's plenty of interdependencies between the actions of the Federal Open Market Committee and what the U.S. Treasury is doing.
What do you mean? I don't think I understand the question.
Like, well, I guess the original question was like, do you have like an idea in your mind of who you think it might be, who Trump would elect to be the chairman?
I have no clue. That's the hard part.
Does it
You
even
know,
matter? It probably doesn't even matter.
well,
I mean,
they're
from
going to
what
have to print money regardless. Like whoever it is, 100%, they're going to have to print money. But it still matters, right? Like right now, having cheaper interest rates would be better than having higher interest rates, all that kind of stuff, right? So I think that it does matter. It's just a question of who that person is and what are they going to do. But look, I think that Scott Bessent would be a fantastic.
it sounds like you think they can't be hawkish at all, though, because like what you said in the beginning was like the government, like they can't let the market go down for too long. Like it has to keep going up.
You can do it for short periods of time, but it's just like the market's going to win over the long run, right? And the market is telling you that it's addicted to cheap capital.
Yeah, I
So
mean, I think that's the general consensus amongst Bitcoiners for sure. Is like it's what nothing stops this train. But I think something that's really that I haven't mentioned yet was on the big beautiful bill. I don't know how many people know that 100% bonus depreciation is back for good. I believe that the only thing that's phasing out is for manufacturing equipment. I think it's 2029, January 2029 or something, is that will phase out. But as a whole, 100% bonus depreciation is back. So meaning like if you buy $1 million of Bitcoin mining hardware, you can decrease your tax burden by $1 million. And I think that's like a lot of people talk about, oh, well, like you could end up with more Bitcoin if you would have just been buying on exchange or dollar cost average. Like there's too much headaches involved with Bitcoin mining. And obviously that's what we solve for at Simple Mining is we make it easy for investors to be able to mine Bitcoin in a couple clicks. And it's not cloud mining. You actually own the hardware, and that way you can benefit from the something like 100% bonus depreciation. And so it will be interesting to see how this or if it shifts the global like mining landscape. Like we know right now at the United States 40% of hash rate. Do we see other mining companies start to come to the United States to mine Bitcoin if they can write off 100% of the hardware? And then what does this mean for, like, you'd see a lot of people posting these charts on hash rate, and after the whole Iran situation, everybody was posting these charts about how hash rate was falling off a cliff and there was some secret covert mining operation in the middle of the desert that had been damaged somehow. which more than likely was not the case just due to what we've seen with summer curtailment. But it still was interesting to see like how like summer curtailment this time around was responsible for the biggest drop in difficulty we've seen since the 2021 China mining ban. But I mean, do you think that with this favorable policy, 100% bonus depreciation is back, do you think that miners start to move to the United States? I can't hear you if you're saying something.
I think we may have lost him.
Daniel, how's it going? I didn't realize you were on the stage.
Yeah, no, pretty good. Yeah, no, I was just listening to Anthony, and what a chat, right? What a legend. Just to be in the same spot as him, but he's back, so let's let him. I want to listen to him.
You back, Pomp? Can't. I think you might be having some mic issues, or it's me. Can anybody else, can anybody hear me talking?
I think we can all. He just went to listener, so he's probably gonna request back. Um, Man, I hope I didn't jinx it. Okay, let's see if he comes back. Sorry.
Yep.
All right. What was the last question?
I was talking about how the favorable 100% bonus depreciation is back. Do we see Bitcoin miners start to move to the United States to take advantage of it?
I think that I think there's two things as to why people are coming to the United States. One is there's obviously a huge economic incentive, bonus depreciation, all that kind of stuff. Some states are giving out, kind of mining credit, things like that. But also, I think that people want rule of law. They want to know that if I set up my business, it's still going to be here 5 years from now. The government's not going to shut me down. And so I still think that the United States is the most desired place to build a business, especially in the mining space. And you saw that when China shut down. You saw 35% of mining move to the U.S., 10% to Texas alone, and I think that that's going to continue.
100% agree. I think going back, I asked you this question a little bit earlier in the conversation. I'd be curious, like what I don't know if you can say like for you personally as an investor, but we talked about how like nobody wants to have 40% of their portfolio in bonds. What do you think becomes like the I don't want to say the gold standard, but like what is like the new weighting that like sophisticated investors that obviously don't have their head buried in a hole, where like I was reading something the other day where like multiple financial advisory firms, a lot of their advisors are talking about like 10 to 40% allocation to Bitcoin. And even like we've seen with BlackRock, like they've had several analysts say like whatever, as high as 70% allocation to Bitcoin. What do you think? I'm maybe for you personally, like what do you think is a good split for like we just outlined what's the macro situation is like obviously scarce assets that can't be printed are going to rip over the Trump administration. Like he's clearly made the signal that like we're in growth mode, we're in run it hot mode, and anything that's valued in a fiat currency is going to like the value the number is going to go up. And so, what would you say? Like, I mean, I don't, you can't give financial advice, but what would you say is like a good split that investors should be thinking about?
Well, I just think that people are going to replace bonds with Bitcoin. I mean, look, Rick Edelman said aggressive investors 40% allocation to crypto. I don't know. He's in the Hall of Fame financial advisor. Literally, he's in the Financial Advisor Hall of Fame. He said 40% for the most aggressive investor. Okay.
And you think that 60% in stocks is going to be like sufficient then, and only 40% in Bitcoin?
Well, they both go up for the same reason,
Yeah,
right?
but there is no second best. Like, how many stocks are going to outperform Bitcoin?
Of course, but I don't think that people are trying to outperform Bitcoin, right?
You think just
The
like
the
for the
average
average investor, they're trying to have like a balanced
no, because
portfolio
you got to remember the reason why Bitcoin outperforms is because it has volatility, right? A lot of investors don't want that volatility. So if you said, "Hey, look, you can go up 1,000%, but then you got to go down 90%," it's going to happen every year. They don't want that.
I mean, do you think we see
Some
another
do.
90% drawdown though? That's another thing to ask yourself is like, do we have the same level of volatility to the downside that we've seen the last whatever few years before the ETFs were here and the sovereign strategic reserves were here and all the wealth funds were here and all of the fixed income was tied up in exposure to Bitcoin? Do we see another 50% drawdown?
I could see 50% for sure. Is it 85? Nah, I don't know. A little harder to see that. But I mean, we had a 30% drawdown a couple weeks ago, right? And that was in a bull market. What happens in a bear market? So 50 I could see. Doesn't mean it's going to happen, but it's not hard to imagine that.
Yeah. And it's I mean there's the whole crowd of people that's like, "Oh, well, this time it's different." And like objectively it is different. The situation is different this time, but are the first principles that are there of like Bitcoin's an asset that's going to go up and it's going to go down. We know that that's going to be true.
Yeah,
So
I
you're
think
saying,
that's
but
the question. I don't know.
yeah. So you're saying then that for like the average traditional finance investor is going to be 60% equities, 40% Bitcoin is what they're going to shift towards. And bonds are just, if bonds completely go out the window, who is going to be holding the bonds?
The
How is the government going to issue these treasuries that nobody wants?
multi-trillion-dollar question. But we know some people want them, right? Because obviously stable coins want them. So it's not that everyone, but remember, we're talking about the average investor. I don't think the average investor is going to put 40% in Bitcoin, but maybe they go 60% equities, 20% bonds, 20% Bitcoin, right?
Maybe a certain percentage Bitcoin treasury companies.
Maybe. It's everyone's different. Like in a weird way, I don't believe in the average investor because I don't think that there is like one thing, right? Just think of if you take somebody who's 25 and somebody who's 65, they have different goals, they have different objectives, they have different risk appetites. Like it's just so different. And
Yeah.
so I think about it more of the people who need Bitcoin, they're going to have a much higher percentage allocation to it than people who don't need it. Right? I mean, it's not rocket science. It's just kind of how things work. And I think that there's a hell of a lot more people who need Bitcoin today than the people who needed it 5 or 10 years ago. And that number is just going to keep growing over time.
Yeah. Would you say that for I mean, we'll just say like an investor that's bullish on Bitcoin, would you say, I mean, you personally have like an ASIC miner with us. Do
Yep.
you think it makes sense
You
to
guys do a
have?
great job.
Yeah, I appreciate that. I mean, I've personally done a significant amount of research and like looking in, and that's ultimately what we're doing is we're helping investors get profitable exposure to Bitcoin mining. Because what you could do is, and maybe Sean, you might have some stuff to say about this because I know Sean is somewhat of a maxi on Bitcoin mining stocks. But even if you just look at a basket of Bitcoin mining stocks, like they massively underperform just holding spot Bitcoin, like just a buying spot Bitcoin on exchange. Why is that? I mean, there's probably several reasons. Is you're getting an abstracted version of the block reward, like the block subsidy and the transaction fees that are actually coming out of a block. They go into the wallet of the company, and then eventually, like they manage their fleet efficiency. They have their financial management. They have all of their C-suite salaries that they're paying, and there's all of these variables that are involved, and ultimately what's going to be reflected in the share price. Whereas if you own an ASIC miner, you have direct exposure. Like we're partnered with a pool. Are you on Luxor, Pomp? Is that the pool that you're using?
I don't remember.
Yeah. Well, we have for Ocean, for example, is a pool that I talk about it a lot, but it's one of the pools that exists today where you can, when you're contributing these shares of hash, you're getting rewards that are directly from a block. Like you're getting virgin Bitcoin that has no input UTXO, it only has an output UTXO. And so that's like you're getting much more direct exposure to mining through that, like consuming electricity and turning it into this block subsidy and these transaction fees than you are through buying like an opaque abstracted version through a Bitcoin mining company.
Look, I just think that again, it goes back to like everyone needs something different, right? Certain people they want the capital intensive business. Certain people want, capital light businesses. I always joke that like, I ride a lot of taxis in New York City. People, why would you do that? You just press a button on your phone, you get whatever. I said, well, my whole thing is I want speed, right? Different businesses, different cost structures, different, efficiencies. I use taxis more than I use Ubers, but I use Uber too, right? Same thing here. Some people want, spot Bitcoin. Some people
But
want
do you
Bitcoin
think
in an
that
ETF wrapper. Some people want a Bitcoin miner.
yeah, do you think that anybody that like truly understands Bitcoin though, like once you understand Bitcoin, you understand how massive it is going to become and how massively undervalued that it is today. Are you still thinking like are you all the way a Bitcoin maxi until you're thinking in Bitcoin unit of account? Because why would you take one investment strategy today on day one that's going to end you up with less Bitcoin than if you could have just bought Bitcoin and whatever, let's say it would have got you to 10 Bitcoin and the other strategy would have got you to 7 Bitcoin and Bitcoin's the most valuable and desirable asset in the world 10 years from now, then why the heck would you go with the one that gives you 7 Bitcoin over 10 Bitcoin?
Well, you're thinking about it because you're optimizing for what is the. I'm trying to get as much Bitcoin as possible, which, by the way, I think is very
Yeah,
rational, right?
using
And
Bitcoin as a
and
unit of account because
correct.
right now we're at the store values phase. We're not even into the medium of exchange. People who are using Bitcoin as a unit of account right now, they're way ahead of the curve. Like if you're an investor and you're using Bitcoin as a unit of account and Bitcoin does become as big as all of the bull-hearted Bitcoin maxis think it's going to be, then you're way ahead of the curve as anybody who's still they're still valuing things in dollar terms.
100%. But I think that like think about your guys' business, right? You guys do a great job helping people go and get exposure to direct Bitcoin mining. And so there are a number of people who I actually think that market is very, very big for a lot of people. And now your challenge is how do you go and get those people to understand what you guys do and how you can help them, right? So it's frankly, if people are interested in mining, like you guys are a great solution for that.
Yeah. I mean, part of it's marketing, and like that's a lot of what I do, but I think it really gets back to the point of like you got to understand Bitcoin first because like I'm not going to try to sell somebody. I mean, there's some people like small business owners like they see the tax side. Like that's like a big thing. Like we have probably several clients that they buy Bitcoin miners and they don't even really understand Bitcoin that well. But once they see that, I mean, before it was what 40% bonus depreciation. But if they have a business and they were like, "Whoa, I can buy this hardware that's generating income and I can write off 100% of it to decrease my taxes," that seems like a no-brainer. And they don't even need to understand that there's 21 million Bitcoin and the nodes and the miners and all of the things about Bitcoin that make everybody so bullish on it.
I don't disagree.
Yeah, well, we got a few minutes left. Let's talk about ProCap. If you want, I mean, it looks like you guys raised almost $1 billion to buy 750 million to buy Bitcoin. You're in the phase right now where you're still working on the merger with the ticker is what OCCC or something like that. What is maybe if you want to just provide some background is like how I mean I know everybody and their dog is starting a Bitcoin treasury company right now, but what is like your background on like I wanted to get into this business, I want to start buying as much Bitcoin as I can, and part of it too is like if you hear Sailor talk, the best way to get more Bitcoin is leverage the corporate structure. And that's probably what you're thinking in your mind is, well, I can leverage a corporate structure to buy millions and billions of dollars of Bitcoin. So maybe, yeah, like what is your mindset going into that, and what is going to set you guys apart from all of the other treasury companies that are out there?
Yeah, I can't really talk about what we're doing just because of where we are in the process from like a regulation standpoint. But what I can say is more broadly about the treasury companies is I think that there's this belief that if you can accretively acquire Bitcoin for shareholders, that Bitcoin per share increases, which leads to that idea of like Bitcoin yield. There's a lot of people who, similar to what you said about the kind of mining, right? Is if they can earn more or they can get more by having exposure, then they're interested in that, right? And so I think this whole rise of these is kind of folks saying, I want to go do that. And so, I mean, look, you see, there's Bitcoin ones, there's Ether ones, there's BNB ones, Sol ones. And now everyone's going to try it with all these different things. Time will tell, where the
Get
right
wrecked.
strategies are.
You do not want a sole treasury company. I'm telling you that right now. But I think the other thing too is like the MNAV is how investors are like rewarding these treasury companies with how they're accretively increasing Bitcoin per share. And part of that is like Adam Back has talked about the days to cover MNAV. So like you can increase Bitcoin per share, but obviously a company that can increase Bitcoin per share faster than another company is going to have a higher MNAV. But ultimately, like something I have been thinking about is like and like you see all these strategy investors like getting all pissed off when there's a massive ATM or diluting and the share price stays flat, relatively the same price when Bitcoin was whatever $80,000. Does and ultimately like that's going to be reflected in the MNAV. But does Bitcoin per share matter that much if like there's perpetual dilution to keep the
I
dollar
think about it
stay
the
flat?
direction of progress is more important than the absolute number. So if you see it increasing at a rapid rate, then it matters a lot.
And they're as a result going to have a higher MNAV than a company who's
Maybe they should, right, as of how the market works now, but that's not always going to be true, not always guaranteed.
yeah. But you can't say anything as far as like what's going to be different about ProCap as opposed to all the other treasury companies that are out there. And yeah, I'm sure it's probably like a delicate thing as the merger hasn't happened yet. But
No, we'll share what we can when we're allowed to.
yeah. Okay. Well, what is one underrated trend that you're watching? I mean, you talked about AI a lot. What's something that you're watching that's like making up a significant portion of taking up your time and your interest and your investment that, well, we'll just say over the next 5 years, that's maybe not directly related to Bitcoin?
I think humanoid robots are going to be the probably the biggest thing. I think that people are drastically underestimating just how big that's going to end up getting. If you believe that there's a world where we have more robots than humans, today there are not that many in the world. It's just kind of like a super, super asymmetric opportunity.
Yeah, and I think that's the direction that we see like a lot of the money going. I mean, even just with like the meta and everything that they're doing to what they're poaching these AI geniuses, paying them millions and millions of dollars to get them on staff to be I mean, everybody's trying to be the best. Do you think that and like even the administration, it seems like they've loosened the reins to like foster maximum innovation, maximum productivity, which is what we need. Like in order to, if we're going to run inflation hot, we need to be able to outgrow it with innovation. Do you have any concerns? Like if 95% of the workforce gets displaced, and I mean, what do we have? Universal basic income, and then it's just like the debt spiral continues to accelerate?
Now, look, I think that that's part of what we got to figure out here, right? Is I don't know what happens, but I do think that people will have a lot more free time on their hands. The people who own assets will do better than the people who don't. And what work looks like 20 years from now is probably going to be very different than what it looks like today. Um, let's see. But in that specific area, I'm probably a market observer more than having a strong opinion.
Yeah, something to think about. Well, I think that wraps it up. And Pomp, appreciate your time. Thanks for coming out. We obviously love being on your podcast and appreciate doing business with you. And I think this will be a good partnership for years to come. Obviously, we're both extremely bullish on Bitcoin, and it's going to benefit many people's lives. And yeah, I'm looking forward to what's to come.
Absolutely. You guys are awesome. I am a very happy user of Simple Mining. We're excited about working with you guys, and just let me know whatever else I can do. If anyone's got questions about it, happy to answer those, and we'll talk again soon.
Sounds good. Appreciate it. Have a good weekend, man.
Thanks, Pump. Thank you, guys.
This space was downloaded via spacesdown.com. Visit to download your spaces today.